Oh, okay, good. All right, well, nice. We are live on 3 systems. And here goes. I've been wanting to edit this for a while now. Let's see. Edit. Oh, no, it's not. That's not what I wanted to edit, though. It's this little banner that goes on the top here. Text. Okay, let me see if it works. In the meantime, by the way, if you guys are if anybody's looking in particular for intraday day trade opportunities, that's usually shown here on the gap up list, and also Catalyst Day. These two lists right here are intraday day trading opportunities like we used to do. But the quality of those right now has not been good. Look at the market cap on these. So we got one that's almost $1 billion called TDCX. You can take a look at that. But even that one up 31% on 300,000 shares and doesn't trade typical average volume. So like there's just nothing qualifying lately on that front. And, you know, thank goodness, because we have a lot better opportunities to swing trade. All right, good. It did work. And so now go live on TikTok. I really, really wish they would allow you to make text bigger there. Maybe they do if you use the plus sign. Nope. All right. That's okay. Neither here nor there. All right, we are live everywhere. So there's going to be some, well, let's just wait for a couple of more people to trickle in. And I'll just ask how everybody's doing this morning. If you're having a good start to the new year. As far as the stock market goes, we got that. Let's take a look at that. Let's talk about the market for a sec here. Good morning, good morning, good morning. Yeah, Nexi. Yeah, Nexi's up a whole hell of a lot on 6.4 million shares traded, but it's 2.5 million market cap. So it's very crowded. It's overcrowded trade. Let's see. So, yeah, on Thursday of last year, we had a gap up island reversal. Marcus, do you know what that is? Do you pay attention to that? Have you absorbed that? When you see that, are you, and I'm not here in the afterlife or something, you're going to be able to see that and know what it means? At the end of a run, if you get a gap up, it's like, what do you call it? It's getting ahead of itself, and then it pushes up for a minute or many minutes, or 30 minutes or an hour, then it starts coming back down, turns red on the day. That puts a ton of pressure on the market for it to be in reversal. It usually is. I call those out all the time. I think it's 9 out of 10 times. It's probably, yeah, good job. 9 out of 10 times. It's the same on stocks, by the way. And then, Friday we had that lower day near the New Year Open, and then boom, yesterday with the first day of the trading year, big drop, perfectly in alignment with that Thursday top call out that we were going to pull back. And today we're opening lower than yesterday's low and close right now. And we've got jobs numbers coming in at 10 a.m. So top of the hour after the market opens. everything will, react. Your AFRM puts look to be going up. Okay. What's up with AFRM? Let's see. Okay. Yeah. I mean, it's just a pullback, so you should expect to, for that to be a very short-term trade. Good morning, Vonyek. Good morning. Oh, got hung up in Mara. Gonna take my losses this morning and find a new strategy. Vonyek, send me a message. I've been trading for 25 years. I've tried every strategy. I'm sure I can help save you some time. Okay, so send me a private message, and then from there, ideally send me a private message on Discord. But if it's on TikTok, that's fine. We'll connect, and I'll give you my Discord private message. But if you can find me on Discord, do so. Anybody, by the way, that's an open invitation. Send me a private message, and I will communicate with you. That is why I'm here. All right. Good morning, Carl, Daniel, Marcus, Steve, Bob, Wojciech, D. Griff, Curious Musings, good morning, and everybody else. And if I missed you, hello. Hope you had a great New Year. Bob, good morning. Hope you had a great New Year celebration there yesterday. We had a pullback start to the New Year, setting a bearish tone right away, but it's not really bearish. We're in a bull market, and these are pullbacks. And we are getting some strong pullback here. It can't be ignored, the strength of this pullback. And we're going to see what happens when JOLT numbers come out at 10 a.m. in less than an hour. And we're going to see what happens at 2 p.m. when the Fed releases their minutes. That could take 45 minutes to flesh out. You won't really see the full move starting to happen until 45 minutes after 2 p.m. today. All times are in Eastern Standard Time, Wall Street time. And then we've got some jobs numbers tomorrow morning, and then on Friday, some non-farm payroll jobs numbers as well. So the rest of the week is filled with a couple of milestones, and yet the market still kind of thinks it knows what it wants to do. So that's interesting. It continues to try to sell off in the growth stocks, but as well as other areas as well. Pre-market, we've got healthcare up, utilities holding up, staples up. Those are defensives. While the S&P 500 and the QQQs are down. Gold is way down, is moving along with everything else. And yet rates are elevated. So it just means that there's rotation going on. There is preparation, there's defensive rotation going on as much as possible. Going into all these numbers and into this pullback. I mean, it's a pullback. I mean, if you can hedge your pullbacks, it's going to show up as, rotation or VIX going up. And that's the right thing to do. Because you never know if a pullback's going to keep on going. You never know. You never know. However, the economy is telling us otherwise. The economy says, let's get started. But the economic cycle is, 2 to 12 years long, an average of 7 years. So the bull run is, 7 years, but it doesn't mean that that's on a daily basis. There's ups and downs, pullbacks, corrections, consolidations, waiting periods. We got the election in November. So there's all kinds of oscillation that goes along with a 7-year bull market. But what you'll tend to find is that the sell-off days are on lower volume than the progress days. Don't compare sell-off days to consolidatory green days volume. That's different. But compare the volume levels of when the market is going up, like pushing up, making progress, not in a consolidation. Compare that to the volume levels of when the market's selling off. If those are different, if sell off is lower or equal, then everything's fine. That's just normal, healthy resting period, on the market. We had let's see, I want to say 2 resting periods so far since November's bull market started after the bounce off of the 200 moving average. And yeah, basically we had this like 4-week one back here, and ever since December 13, we had this. It's now going on almost 4 weeks as well right now. So this is completely normal. And the one thing you don't want to do is be a bear in a bull market. And how can you tell the difference between a bull and a bear market? Well, I mean, you could really switch sides when price goes under the 200 moving average. That's the real time to switch. Now, there's ways to potentially switch earlier than that, but they're advanced. And, I might be able to pick those out for you if you're, a viewer. But regardless, in your life for the next 100 years, however long you live, you want to be watching, if price goes under the 200 moving average on the markets, especially across all 3 indexes, the Dow, S&P, and NASDAQ, then you can be a bear, okay? But it has to close below there, and then ideally go down further and then come back up and bounce off the bottom of the 200 moving average. And then now you can be a bear for a year, for a half a year, for a year, for a year and a half. So bear markets are short market, and but right now all economic indicators are that the business cycle is starting, and that we're moving into a time of growth and expansion, economic expansion. Of course, that could be derailed by anything. Okay, so you always got to be on your toes. All right, so anyhow, that's the outlook this morning with the market right now. Market's making new lows as we speak, and it's essentially pulling back since Thursday's Gap Island reversal top signal that we talked about. And so we've been prepared for this. I converted everything I've got into iron condors. So I've hedged, since Thursday, and I continue to hedge and manage and prune and roll and change and modify and add and reduce and increase, my positions in order to remain hedged during the pullback, which is fine. And by the way, you can also just hedge with the flat out, put on the market, QQQs. All right, so we've got 14 minutes until the market opens, and a few people are talking about Nexi, so we'll take a quick look at Nexi. Oh yeah, Nexi with a very nice move in pre-market, and so we'll put that on our radar. That's definitely day tradable from the way it looks like, but the float is extremely small. It's a micro float, so it's very crowded. Got to watch out, but the sentiment just can't be ignored. It just keeps going, just keeps stair-stepping. So there you go. Usually, a lot of that gets wrung out by just before the open, and can have its first bearish moment right before the open, just to keep you on your toes. But keep an eye on this all day, including right off the open, for potential breakouts to higher highs, and possibly even a halted, skipping, crazy day, because the float is very low. So that's Nexi. Tesla, somebody asks about Tesla. I'll tell you. Let's see. If you're interested in joining our group, come on over to the link in my bio and you will find it there. I have that up right now on the screen. All right, now over to Tesla. Morning, Bud. Yes, morning to you too. Okay, I believe I typed Tesla. I don't know, sometimes it's really slow. It's not coming up yet. Yeah, so Tesla's looking outstanding, and it has a little bit of room here to back bounce off of the moat, the mother of all trend lines back there. But it broke out of the trend line. It's coming back down, and it's ready for entry signal. But we need to have an entry signal. That is what we need to wait for and see on Tesla. And usually those signals, those are just, Tesla's a growth company. Usually those signals align with the market signaling as well. And it's the days leading up to that all the different, leading stocks start to get into pole position there. And they start to get into a position where should the market, just blow a feather's touch, in the right direction, the ones at the starting gate in pole position will have a signal occur. And, you can be in my group, come learn to trade with me to learn, all the different kinds of signals that you can be aware of. There's also the market mastery. So those of you over on TikTok and YouTube and all the other platforms, you can just click the link there somewhere. There's a link, and then you can be led over to that market mastery, where there's hundreds of videos for you to be able to watch on demand. So Meta, Meta's looking great. We'd be looking for some kind of an entry signal on Meta coming in the next few days or weeks. So, but we're probably getting close to the bottom of this pullback consolidation. That doesn't mean that it can't be hit again in a week. It just means I'm talking about that zone, its bottom for the moment, maybe getting close to being put in. And that's on everything, on the market. And, oh yeah, I was looking at Meta over here for you guys. Meta. And then, we can, for as much as, 3 or 4 weeks, which I think is less typical, though. Typically, I think we run until March, although I have to double check on that. I think January is usually an up month, though I'd have to double check that. Let's see if I can pull up my seasonal trader app. Okay, that seems to be down this morning. That's all right. All right, so the market's opening in 9 minutes, and we're pretty well informed here as to what to do. Yeah, biotech on watch. The biotech ETF looking good. What was that again? Bio. I'll just type biotech funds and XBI. That's it. XBI. So yeah, biotech. Those are somewhere between shitty penny stocks and excellent high growth stocks. They're somewhere in between, and so of course they're all at their bottoms, and so there's a ton of room up. And so they've all been popping like popcorn in a pan, and together as a whole appreciating. But as individually, it could be quite a rough, rocky ride. But there's definitely opportunity in the biotech index, XBI. Good morning. Morning, Bob. Powell's pivot It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. That was on December 1st. So we'll have more minutes from Powell on at 2 p.m. today, and that should move the markets. And again, just reiteration, at 10 a.m., so 30 minutes after the market opens, JOLTS numbers will be released. Those are jobs related. And we got more jobs numbers tomorrow, and then we've got non-farm payrolls on Friday. So we have 3 days in a row of jobs information, and then we've got FOMC minutes at 2 p.m. today. So to see the market moving the way it is, you know, you have to wonder, why is it moving? But then when we look at rotation, we see that consumer staples are going up. So that's so healthy. That's not a crash or bearish in any means. That's just simple consolidation moment on the market. You know, during that top on Thursday, you know, and as this correction continues, the rotation is into defensives. That's completely normal. So you know, you could have gone long on Thursday in staples, healthcare, and utilities, and short the market puts on the Qs and S&P 500 if that's you know, the way you want to play it. And those would have both, you know, ripped in both directions and created positive alpha for you. Remember the 1920s? Yes. Yeah, the 30-year is pounding up against upper resistance level. Let's see here. Oh, I pulled up the wrong one. But yeah, I do track the 30-year, so it's interesting. So we had this pivot low right back here, which is a resistance level at, it's like 4, you know, but it's kind of like 4.2% yield on 30-year rates, acting as a resistance area. And, you know, that would be completely perfect for rates to go up to that, maybe even go through it a little bit, but basically reverse in that area, find pressure in the area, come back down, maybe it consolidates and creates a wedge for 3 months, and then breaks lower, like in February or March. And that's when the market also would start to run. Maybe that's later this month, but the way we're going to trade the market is we're going to be trying cheat entries. We're going to be trying to find cheat entries. We're going to be getting in at the lows before the market runs and planting some seeds down there in some leading stocks. And we won't have to have our timing right. For those of you who can do credit spreads. If you can do credit spreads, you don't have to have your timing right. And you can still take the same outlook and same bet, essentially. Kim, good morning. Did you ever figure out where that came from? Hey, RJ, good morning. Because I cannot figure out where that came from. Well, that's all right. Okay. So we got 4 minutes until the market opens. And Nexi is now falling below. There it is. Gamma, but basically below, well, a pseudo support. So it's starting to peter out now, Nexi. But you could be looking for a 5-minute dip buy or a 1-minute opening range breakout or a pre-market high breakout on Nexi. If it does, it's probably going to halt. Let's see, where's the object tree here? So their object tree. Oh yeah, I want to get that way up here. And now when I click off, there we go. Now Nexi's Gamma line is white and on the top. Gotta learn how to use TradingView. Such a great app. Okay, we're watching SPY this morning. We're watching the Qs. And then remember, again, at 10 a.m., we'll get those JOLTS numbers. Okay, thanks, Kim. No, take your time. And, good luck booting up your business for the new year. Cheers. Thoughts on Fibonacci? Not positive EV, meaning it's a useful tool, but you will not achieve profitability with that tool. It doesn't have the right edge. But for basic 50% understanding a retracement of 50%, yeah, you can use that. A lot of inexperienced traders, furus, will tell you that, just do a Fibonacci retrace to 50%. And shut the fuck up. It's not Fibonacci if it's coming back to 50%. That's just a 50% retrace. That's just coming back down halfway. Stop talking like a fucking furu. Fibonacci, if you're going to try and do something with Fibonacci, it's going to be something a little bit more obscure, like those Fibonacci levels. Say the Fibonacci retrace to a 50% level. My God, come on. NIO, thoughts on NIO? Well, we've got 2 minutes in the market open. Once we're rolling, perhaps I'll take a look at that. Let's see what we get off the open here. Prices went down overnight. And we are now marked and ready to open, gapped down again. Every day we will be on top of these markets. Every day. Do I know what the best platform to use in Canada is? Everybody, can you help him out with the best platform in Canada? I think it's called Questrade. But you might even want to go with a different country's brokerage. So, but well, anyway, Questrade can charge high fees, $7.95, I think, per trade or something, which is ridiculous, ridiculously high. I say boycott them and don't, find something else till they can improve. Somebody says quick swap. Thank you. I don't know what that is, but Tony Powell. Okay, market's opening in 20 seconds. I'm going to be mostly watching my positions, but take a look at Nexi. There goes Nexi right now. Bam, that's an entry on Nexi. It's breaking pre-market highs right here, right into the open. 8 seconds till the market opens. RJ's going to be on top of that Nexi. I almost guarantee it. 97% chance. That's exactly what he's looking for. All right. The market bleeding right off the open, bleeding, gapping down. Now, if the market were to go red and push down lower off of a gap down, that's going to create exhaustion, and it will find a bottom. So that'd be great. But what we'll probably see here is something a little bit more tricky. Something like a bull trap or the likes, meaning we might see some green off of the open here. If we go the other way, great. That's just a lot more predictable. Okay, so we're getting some green off of the open now. Nexi did break those pre-market highs, but it's pulled back hard. Be very careful to exit underneath the most recent pivot if you got in that, and make sure you size small. All right, Apple with a supporting open. And that's going to aid the market for Apple to be having such a supportive open. And then how about Tesla? How's Tesla? That should be moving the S&P. Tesla also holding the open. Anything can change. in a moment. I'm going to take a look at my position over on, what is it, Spirit Airlines. That's just moving along perfectly, swimmingly, playing right into my hands on a daily basis. All right, and then JetBlue. Let me check on this. I'm also in JetBlue. Okay, Tesla with a strong red move down. So that's going to screw up the S&P 500, and that may cause a little bit of alarm on Apple. But the way those just moved, that's going to set at least a sideways motion in growth and potentially some depreciation in value stocks. Why Naughty didn't do it? Alrighty. All right, Nexi looking okay for intraday day traders. That's not what I'm trading this morning, but if that's your style, there you go. Nexi is a hot micro cap day trade. Ideally you want a high frequency trading setup for that, which I teach. All right, now over on JetBlue. Okay, JetBlue is just perfect. Let's see if I can close any of that out. It's pretty frustrating that, Thinkorswim, this platform that came out about 25 years ago that I've been trading on my entire trading career, it doesn't fix some of the just basic stupid stuff that it does wrong. Just clunky stuff, Because it'd be nice to say, oh man, remember when, 25 years ago when you were entering an order and this would happen? Unfortunately, you don't have to. That's still fucking happening today, 25 years later. Why did the markets dip today? I don't know. It was overnight, but we're in a pullback. It was mostly, it looks like rotation, and I don't know if that's exactly what happened overseas in foreign markets up to this morning, but that's what we're seeing everywhere else. But oddly enough, I'm seeing a bit of the opposite, and Apple's really flying, by the way. There's no signal on it as far as a swing trade goes, but we're seeing staples depreciate, healthcare depreciate, and utilities depreciate. That's defensives. Those are depreciating while growth stocks are holding, and even Apple is moving up. So that's acting like this is the bottom for smart money. They're rotating out here and back into growth. They feel this is enough of a pullback, I suppose. Let's go take a look at the Qs and see what percentage is this pullback. From the top to the bottom here is only 3.3%. That's crazy. I don't know why they would think that. But like the last pullback range was 2.65%. So maybe that's what they're going on. We stayed there for 4 months. 4 weeks. We stayed 4 weeks into a 3% pullback. And maybe that's going on right now as well. Yeah, staples are really selling off. It's a rotation out of safety and defensives and into growth. I don't know. There must have been a leaked freaking JOLTS report, and smart money's all over it. But we're supposed to get the JOLTS report at the top of the hour in about 23 minutes. Yep. You're welcome. Priced in. What is priced in, would you say? Getting alerts on AZO. I'm going to take a look at that in 1 second here. Okay, that looks good. AZO, let's see. And United Health. AutoZone, I believe, yeah. I'm not sure what the alert would be on AutoZone. I must have just left an alert up. And what is that? And water? Oh, interesting. Pull back on water. Water has been in a 43% run in 40 trading days. That's very good. 1% per trading day, and it is now pulling back, and it's worthwhile to keep on watch. It's a little bit of on the slow side. Lately, it's been about 3.6% ADR on the high end. Normally, it's about 2.3%. But there's good stuff on Waters Corporation, and could provide an entry. And what it could provide is a nice little iron condor entry, potentially. I'd like to see kind of like a bullish signal, but yeah. You want to see things turn around. All right, Nexi completely failed out now. No go on Nexi. SP 500 has found support, and Tesla's found a bottom. Apple has found a top. It's doing well. Staples found a bottom. Defensives all found a bottom. So we've created our first range. We've got tops on growth, and we've got bottoms on value in the S&P 500 and the defensives. And those together might just fight each other all day. Yeah, I can't get enough of that Spirit Airlines. Love it. Let's take a look at Bitcoin really quick. Yeah. We had that mysterious appreciation yesterday, which was very strange. And then all through the night, I guess we had that pullback. Let me take a look at that on the intraday chart. See when that occurred. You know, it ought to have happened yesterday. No, it really happened all overnight. So we were talking about, how Bitcoin could be leading the market. Well, it kind of was, but now it's lagging, and it's back where it should be, the bottom of the range. And that's fine for us. Okay, we get a little bit of a strong pullback on Mara and Riot and MSTR and HUT and BTBT and all those Bitcoin stocks. But if you sold the options on those, then you're going to be collecting premium, and that'll make up for that move, and the whole thing will just end up neutralizing itself out in a couple of days, and will be no sweat. This is basically the bottom of this whole zone it wants to stay in anyway, 40,000 to 45,000 on Bitcoin. Okay, the growth markets continuing to show some support and strength, and the S&P 500 weaker, but has seemed to have found its bottom. I'm concerned that it's going to go make a lower low, but if it were to make a new high of the day, that'd be from the market open. That would be a great sign from the S&P 500 if it can do it. And it looks like it's trying to do it right now. Speak of the devil. And the Qs are about to make a new high of the day right now. It's so close, just a couple of cents away. Carl says, "Is it too early to put a spread on that group again?" So, Carl, you don't have any crypto or Bitcoin allocation stocks in spreads? You have none? Zero zip? Because I'm still holding mine. Oh, I see. What you did less ideally was you picked too short of an expiration. You really want to try to find 45 days to expiration and get into those. I think February 16 would be that. And then you trade the exact same amount of time. So like if you were wanting to be in for a week or two, you don't get 2 weeks to expiration. You start at 45 days to expiration roughly, 30 to 60 something monthly with it's good and liquid. And then you stay in it for that same period of time, but during that 45 DTE to 21 DTE period. There's many reasons why you want to do that versus the other one, to say nothing about assignment risk and expiration risk and gamma risk and all these different risks that are very heightened the last 2 or 3 weeks of an option. So you stay in for the same amount of time, and but you're after smoother Greeks and smoother information. So you say, how about now? Probably. Let me see. I mean, Mara has found a pretty strong bottom here. It's moving up, gap down, move up, off of a moving average. Yes, this is a sneak entry on Mara. You might sell even something like a 30 or 40 delta put credit spread here. That's risky. You can go ahead and go for the 20 and just have easy money, okay? But you kind of got a situation where it's bouncing off of the 20 moving average on a gap down move up, which is a signal we talked about in the class. That's the secret signal. It's one of the holy grail signals. Is bounce off of a significant moving average on a gap down during a pullback, and it's gone green. This is it. So Mara is putting out that signal perfectly. Yes, I think I'm already in it though. So myself, I don't know that I need to take that. Yeah, I already have Mara. But what I might do is get more. I have a big 2010 wide, $10 wide put spread on that, but I'm going to get a different one probably. Let me go take a look at it. I like the trade a lot. Talked myself into it. So February 16, the bounce level was basically 20. So I might just double up on what I've got, Carl. I got the 2010 put credit spread. That was just the right size for me. I might get more of that, and not might. I'm going to. It's just I'm not sure if those are the exact strikes I'm going to choose. I think just for ease of simplicity, it's going to give you, my God, that spread is paying out 316 right now. And where's my calculator? Son of a bitch. Where are you? Oh, there it is. Way over there behind my other computer. Let me pull this up for the other guy since we're talking about it. So you see that everybody on TikTok, you see how that's bouncing right off of the 20 moving average, the orange line there. That's a secret signal. That's a signal I don't share, outside of our group usually, because that is one hell of an excellent signal. All right, so but what I was saying is you're going to get $315 for no, 6. Why is it saying that? Something's not right. Hold on, got to sell this, not buy it. Okay, $311 for $689 of collateral. That's 45% return on capital in 44 days. That's a percent per day, or 1,200% per year compounding. All right, I'm sending my order in. Did not get a fill. It's sitting right at where it should be sitting. I guess I'm asking a little bit too much of it. Maybe you're fighting me. Stay on my trades, Carl. No, there we go. All right, yeah. So I doubled up on that. That's excellent. That's a beauty. She's a beauty. The reason why I went with that wide strike is minifold. I don't know if we've talked about it in classes, but we could talk about it in another class next week. This week we're going to be focusing tomorrow night on in our master class a lot about probability and expected value, and creating a system based on probability and expected value. Okay, the same thing's going on. The Qs were acting supportive. The S&P 500, let's check in on that index. Yeah, that's kind of what I was expecting. Value stocks dropping, defensives dropping. So this is a growth bottom, because growth market's going up. That is a smart rotational signal that we're at the bottom of this pullback. Now, can smart money be wrong? Yep. They can get blindsided. Yeah, I wouldn't, okay, why not? But, you'll hear me talk about a lot. Don't be a bear in a bull market. You can be a bear when the price gets underneath the 200 moving average. It's time to make money. Follow the economic cycle. Read some books. Learn some stuff. Read this one. It's not the time to be a bear, a contrarian, guessing tops, going against the grain. The market continues to make big moves up and small moves down. That's a bull market. And the people who make the most are the people who stay out of the market when it's breathing like that, when it's exhaling, and they get in for the rallies. They're not the people who give it all back when it's switching direction. You stick with one direction and you move forward from there. Oh, what happened? It's trying to reconnect. Okay. I don't know. The TikTok said it wasn't doing too good. We've got about 9 minutes before the JOLTS reports come out, so we might as well stay together this other 9 minutes. Strikes, this is your trade. Carl, it depends on how much money you've got and what you want to put together on it. I did the 2010. It was like $311 of credit for 680 or something of collateral. Do you have $680 you want to throw at it? So that'd be the 2010, February 16. If you want a different kind of risk level, you can go with the 2015. You can go with the 1918. You can go with the 2019. But the 2010, I choose that for a lot of smart reasons. It's in case I want to roll. I want those strikes available in the next month as well. If you choose like the 1918, that might not be guaranteed. But if you choose like the 2015 or the 2010, or maybe the 2019, but it basically bounced off the 20, and that was Mara. But if Mara doesn't work out, something else needs to. Yeah, but see, if Mara doesn't work out, something else needs to, so you need to diversify. You shouldn't put a bunch of eggs in Mara. You should put your eggs all across lots of other stocks. So you can get, what you expect out of everything. All right, move to group over here. Where's your boom? Okay. Let's find another one. Yeah. I'm in various ones. Like there's Mara, MSTR. That's another good one. But in my opinion, they need to be giving a signal. Yeah, MSTR doesn't have a signal this morning. Mara does. All right, Snow Team, AMD, D-Dog, URASQ, Riot. Let's see, Riot. Neo's looking strong. I'll take time. Well, yeah, it is time to be excited. And it is time to be bullish, rather. You could be going with a 5-minute dip buy over on Nexi. If you don't know what that is, don't guess. That's a technique for trading that we use intraday. Big drops on some of our lists yesterday. Yeah, but it depends on if we got a signal. Oh, it looks like Riot kind of has a signal. Yeah, it's bouncing near the 50 moving average. That could potentially be a signal on Riot. I'm good. I got my allocation on Riot already. I need more diversification. I've got those bets. What I do need to do is potentially get some Iron Condor set up, especially if we start moving the other direction at 10 a.m. here. We've got 6 minutes until the 10 a.m. JOLTS numbers come out, and then we've got 2 p.m. Fed minutes release. That's going to tamp the market for a while until 2 p.m. RJ still here? Yeah. It's so funny whenever you see ZVZZT on your screen. Can you please leave ZVZZT out? Jesus. I remember when I was trying to find what the fuck is this ZVZZT that's doing so well every day, and I can't find it. This one, HUT, is bouncing off of all of its moving averages right here. HUT, H-U-T. So that could be one, Carl, for you. However, I don't know how liquid that option chain is. What trades market going down? We are fixed. What's that? Fucked. Okay. Labu. Okay, that's the That's another biotech index, I believe. Let's see. Biotech bullish 3x. So the move off the bottom in biotech to the top on Labu, 167% and 31 bars. Yeah. So Labu, great. Let me take a look at the option chain on Labu statistics. It's on the medium low side of liquidity. Let me take a look. What's the open interests? Yeah, that's too light, unfortunately. Too bad. Looks great, but we could always use what is it? XBio? What did we just looked at it? Was it XBio? No. XBI. Why didn't they just put an O at the end of that? I guess it's biotech index. So I believe XBI is biotech stocks that are on the S&P 500. It's like a subset. It's like a sector. And that same move on XBI is 42%, 31 days. We're over on Labu, it's 167% because it's 3x leveraged. But the options on XBI, let's take a look. Yeah, are 4 times as liquid. And if we went and check the open interest, the open interest is in the thousands upon thousands per strike. So unfortunately, Labu, not good for the options trading. Ooh, the market's taking a turn to the downside now. Little reversal. Before the even numbers have been released. What are you doing, market? I'm just going to grab some QQQ puts really quick. Make sure that I'm hedged just in case. Going into the numbers, I can always release them. Okay. I will get less. Can I get 3 contracts? Nope. Damn. I can only get 2. That sucks. Without freeing up some of my capital. That's because I got that Mara. Fine. I'll hedge with a little bit of a 396 strike as well. Out of the money. All right. The data comes out in 1 minute. I push those Qs all the way up to my hedging group. All right. And we did find a little bit of a bounce and support there on that market drop. But here comes the jobs numbers. And I've got my portfolio 75% hedged. It's not enough, but we're trying. You do what you can. "20 seconds until manufacturing PMI and JOLTS data is released. Here we go. 5 seconds. You will see some kind of a snap on the market, up or down. Doesn't matter. That doesn't necessarily dictate direction. You have to see how it transpires from there. All right, it's out. The data is out. Prices reported at 45.2. Consensus was 47.5. That looks deflationary, I believe. Let me see how the rates are reacting. And then JOLTS numbers. ISM. Okay, let's actual reported. Pretty much in line. Oh boy, these numbers were just right in line. So these met expectations. I'd say that's good. There may be some devil in the details in there, though, that will take a few minutes to show up in the market. But I'd say that this was a good report. I'm going to stay hedged until we can get some kind of a pronounced move, but it generally looks like everything's going up on this information. A rising tide. I am seeing actually gold going up, so that could be a defensive. But everything's going up. And rates are going down on this move. Okay, so this is good for the market. So I'm going to go ahead and release my hedge now. And I can put it back on if I need to. Hold on. Before I click the button, let's just make sure we're not going to make a new lower low. We're right in the middle of the range. I don't need to be jumping the gun. I will keep it on if we're going to go red. Okay, so far I'm keeping it on. We're about 75% retraced. And that's not a Fibonacci retracement. We are not 78.2% retraced right now, or 72.8 or whatever it is. I've done tons of Fibonacci trading in my life, and yeah, it's wrong more than it's right. And then everybody gets the, oh my God, it's incredible, because when it's right, it's right. But you don't hear from those people again many years later. Oh, good. I got the seasonal a screener to work. So let's see over here. Popular instruments. Okay. Yeah. January historically is roughly flat. February moves up historically to the middle of the month and then comes back flat. And then March is a down month. And then April comes back to where we were in January. And then from May until August, so all through May, middle of May, June, and July, we have a very nice run. Now, that doesn't examine election years, which I can examine. But give me a minute here. I'm still watching the market and figuring out what we're doing. Okay, I'm going to go 38 years. And I'm going to filter out. No, go back. Seasonality. NASDAQ, 38 years. And presidential elections, years. I'm just going to double check that's correct. Yes, that is correct. And now give me detrended seasonal data on that. Okay, and what we see is in presidential years, January does not do so well. January is a minus 2% month, and right off at the beginning of the year. Very interesting. And then we stay here for most of the rest of the month. And then things pick up. We rally at the end of the month. Let me show you this, you guys. This is really good information. All right. So, right at the end of the month, January, we rally from minus 2% to plus 2%. So that's almost a 5% rally on the S&P 5 on the Qs. And then we level off for most of the rest of the year. Yeah. And that's what I expected. This year could potentially be pretty flat and lackluster due to it being an election year. All right, looks like the hedge is holding. Yes, S&P 500 is turned around. I'm ready to release my hedge. Okay, good. And I had another one as well. Taking that off now. Now we may need to hedge going into the 2 p.m. Fed minutes. But for now, we appear to be at least holding here, if not actually going up. It seems to be the VIX is concurring, and the VIX is reflecting the options buying market. Big pillow fight. All right, and then, so there we go on that. Move this to closed. All right, very good. So I was happy to stay with you through that, and we're now orientated for the trading day. Remember, there's 2 p.m. data coming, and until then, there may be some slowdown going to that 2 p.m. data. And then once that data is released, it could take about 45 minutes for the market to really digest everything, maybe even an hour that J. Powell says, and that's in those minutes. And but you'll see an initial strong reaction. You just you can't necessarily trust it. You need to see how it plays out. All right, everybody, have a good morning. Thank you for tuning in, and don't forget to click the link wherever it is to come into our group and continue to talk about opportunities throughout the day. Have a good one, everybody, and Happy New Year.